This morning we have Loeys, JPMorgan Securities Head of Global Assets, joining us right here in our Hong Kong studio. Good morning to you, Yan. Thanks for joining us so early. Well, talk to me about equities, because you've said before that equities are close to a noisy bottom.
Yes.
What does that mean?
Well, the bottom formation of markets, meaning that obviously equities have been going down. They're trying to figure out where is the bottom in the market, at what point you really want to buy this. But typically, when it's trying to do this, it's quite up and down.
Yes.
So we think we're going to be in a bit of a range, a very noisy, volatile range.
Right, but this is the bottom. Is that what you're saying?
That's what we're betting, yes.
Why? What makes you think so? Because, we have that all-important Greek vote on Tuesday. You still have slowing manufacturing, consumer sentiment in the U.S. I mean, there's a lot of concerns still out there.
There are.
Yeah.
But the issue is, will people get more concerned than they are already?
That's a good question.
Have they really...
have they priced it in, right?
Well, have they capitulated? Have they adjusted their positions? And I think they've gotten very negative about Greece. Long term, they have reasons to be. Shorter term, I think most of news flow is going to be positive. We're all gotten very pessimistic about growth conditions, largely in the U.S. and the developed world. I think the bad news is out already at the moment.
But then you hear someone like George Soros who says that there's an impending collapse of the Eurozone and there's going to be some sort of mechanism which will allow individual exit from the common euro. That to me doesn't sound very optimistic.
Right. The issue is, when is this going to be happening? And I think what he's talking about is, will we get more clarity? Will there be procedures created to allow somebody to exit the union? I mean, the procedures, the legal ability exists today already for somebody to leave the European Union and therefore the euro. We just don't know how it really can be done specifically.
Right.
I don't think this is happening this year or next year.
Okay. Well, how do you think this whole Greek crisis will play out? You tell me.
Well, what we think is going to happen is, indeed, the Greek government will be promising to make a lot of the austerity cuts in its deficit. It'll be promising this. So the plan will be going through Parliament next or this week. Then in coming months, more likely the second half of the year, it will indeed become very hard for the Greeks to actually deliver that. Simply, their economy is moving down. And sometime next year, there'll be an arrangement where a lot of the debt will be forgiven one way or the other.
Okay.
I think a lot of the lending, or at least the support, will be given by other European countries rather than the market itself.
Okay, well, let's talk actually about investment, I guess, ahead of, this play out of the Greek crisis. Right. Because you're saying to hedge yourself, stay hedged, and instead of buying into the euro, US, that's straight cross, buy against the euro and the Swiss franc.
Well,
what's
basically, when you look around the major currencies, the four major, sterling, yen, the euro and the dollar, each has their own version of fiscal problems. And, each country is very different, but they're all in fiscal trouble. And, so the issue is, the euro area has its own problem. If you think there's going to be downside on the euro, do you buy it against one of the other three, which has its own problems, or do you do it against countries that don't have these same fiscal issues? And the block that we're looking at, that within the developed world has the least problems, are what we call the G6. It's the G10 countries, minus the four biggies. So that's a Canada, that's a Norway, that's an Australia, New Zealand, and a Switzerland.
All right, so you're saying short the Aussie dollar. I won't get into that in details because I'm running out of time, but I really want to get your thoughts on QE3, because you worked at the Federal Reserve, I think the Fed Bank of Philadelphia. So with the conditions we're seeing in the U.S., we also had the BIS talking about the developed countries, they need to remove stimulus faster, otherwise there's going to be these financial distortions. But we're still hearing the market calling for QE3. Do you think that's really going to happen?
We don't think QE3 is going to be happening. There's clear, massive political opposition within the country and within the Federal Reserve again to trying this again. We've done it twice. Yeah. We got lucky twice. The third time may not be so lucky in that we do a lot of purchase of bonds, and we haven't so far created any inflation expectation uprisings. So what we think is happening instead, and what you just saw last week, that instead of QE3, we're having what we call IEA 1, which is the release of strategic reserves.
That's good. Yeah.
It looks a bit like desperation. Clearly, they're running out of the ability to cut taxes or to provide more large-scale asset purchases. So they're doing the last thing, which is the release of reserves of oil, which is really pushing oil prices down. They will provide a good boost to consumption in the second half.
So we'll keep using the acronyms then, Jan. Thanks for joining us
welcome.
this morning. Jan Loeys, who is at JPMorgan Securities, head of global assets. Now,